We continue to watch another developing story here in Japan. The massive projected loss for Japan's biggest agricultural lender, Norinchukin, has yet to spell disaster for the country's large banks. Nochu, as it's known, has flagged that net losses of $9.5 billion could still get worse, but credit default swaps signal no spillover to the overall banking sector. Bloomberg senior analyst for fixed income research, Pri Silva, joins us now for more on this. Pri, why are other banks across Japan insulated from this crisis that seems to be a little bit more ring-fenced around Nochu at this point?
Yeah, hi. So in the case of Nochu, the problems at the bank stem from a negative carry in their investment portfolio, and that's largely due to their funding costs. Nochu's dollar funding costs, our foreign currency funding costs, came up to little over 5% last year, and that's a stark contrast to the other banks, and that primarily stems from their lack of core deposits in the overseas markets. And so Nochu relied on confidence-sensitive institutional funding, and that's expensive, and they weren't earning the same carry, and that led to the net loss. And what's lost in the story is the fact that Nochu generated a net loss in the last couple quarters. So, but that's unique to them.
It's really interesting about this bank is that they also suffered massive losses after the global financial crisis, right? When it comes to trying to restructure their portfolio, how difficult will it be?
So the challenge is meeting the funding costs for them, and how do you generate enough earnings from a securities portfolio, and also meeting the bank regulatory capital needs. And so in order to do that, they need to add high generating assets with low capital costs, and I think that's the challenge for them. How difficult? There aren't that many options where you can generate over 5% on a risk-free basis. So one of the likely outcomes is they probably may need to deleverage the balance sheet.
If they're looking to raise more capital, first of all, are they going to do that, do you think? And who might that try and tap for that?
So there is talk that they intend to raise capital, and the only option for them is to go to their cooperative members, and that's a requirement for them by law. So as a result, that's their only source of capital. Can they do that? They probably could.
Yeah, we'll be watching for news on that, because that will have big market implications on how investors really accept those news, right? Our senior analyst for fixed income research, Pri Silva, there with the latest on Nochu.